Alrighty, hi everyone, and welcome to today's lecture. Hopefully, you guys are all here for the HSC Economics lecture. So, if you are, and this is where you're meant to be, welcome. My name's Alice, and I will be your lecturer today. Just before we begin, I want to say welcome to everybody. I'll give you guys a little bit more about me in a second. But before we begin, just a little bit about ATAR Notes. So ATAR Notes has been around since 2007, and they've been offering heaps of free resources to make sure students like you can thrive in your studies. So for you guys, that's thriving in your final year of Year 12 in the HSC. So we've been offering these free lectures since 2015 with the mission to help students as much as possible. And we also have a ton of other free resources for you as well. So these are just some of the things that we offer. You can find pretty much everything at atarnotes.com. So that includes hundreds of downloadable study notes for most, if not all, of your HSC subjects. Lectures like these ones, run by past students who have done the course, can give you a little bit of advice and tips and tricks that helps them get through it. Some discussions online about different courses, particularly things like English, videos online, just another way to engage with your revision, newsletters, for when you eventually get to the point in Year 12 where you want to start calculating like how low can you go. There's an ATAR calculator, some other articles and stuff about study strategies and tips, and heaps more. So if you want info or tips on how to use these resources, check out the info doc under the resources section of this lecture page. We also have free notes, videos, guides, things like that from past students. So if you do have questions after the lecture or during the lecture, best place to go is the Q&A section in the lecture if you guys are watching it live, where I will be there to answer your questions. So throughout the lecture, again, if you're watching it live, feel free to ask questions about any of the content we're going through, but also other things on ATAR Notes, study tips, advice for Year 12 in general, anything like that. You can ask me questions and I'll be sitting in the chat for you as well. And then if you're looking for even more support, got you covered with ATAR Notes Plus. This is pretty much the online library that has all of the ATAR Notes, like course books, topic tests, things like that. You probably recognize their covers. Also looking at text guides and things like that as well. So without further ado, welcome to HSC Economics for the January lecture series. My name is Alice, like I said, and I will be your lecturer for today. So a little bit about me, I guess, before we begin. I'm currently studying medicine in Newcastle. If any of you guys are interested in studying medicine, I would definitely recommend Newcastle. I'm biased, but I do think Newcastle's the best. I graduated in 2022 with an ATAR of 99.3. And in Year 12, I only did 10 units. So bio, economics, English advanced, maths advanced, and 2-unit religion. So I tutor all of these subjects at TutorSmart, and I also run the HSC Maths Advanced class. If any of you guys are looking for private tutoring in any of these subjects, including economics, feel free to reach out at TutorSmart, or if you want to join the HSC Maths Advanced class, I'll be there as well. So I guess more about me. This is my third ATAR Notes lecture series, so you may have seen me before in some of the maths or religion lectures. And like I said, I run the maths class and do private tutoring as well. So if you're interested in any of that, reach out at TutorSmart. Otherwise, we will sort of get on a little bit with today's lecture. Okay, so pretty much today's lecture focuses on topic 1. So the reason for this being, most schools do topic 1 at the end of Year 11, sort of in like that term 4 period where you sort of finished Year 11 and haven't really started Year 12, but you have started Year 12. So it'd be a good refresher going into school in the next few weeks. And the other reason we focus on topic 1 is because a lot of students don't like it. They forget about it, they ignore it, they pretend it doesn't exist. Granted, I was one of them. Of the 4 topics in Year 12, topic 1 was my least favourite. But because of that, I think it's good to go through it together. We'll get a good understanding of the global economy and globalization, international business cycle and regional business cycles, which is what that stands for there. free trade, international organizations, trading blocks, and FTAs. We'll get a really good understanding of everything to do with topic 1, so you can sort of tick off your economics topic 1 revision for the holidays done. And then we'll just go through a few, I guess, broader tips and tricks for economics and for doing well in economics to get that band 6 at the end of it. So before we, I guess, start looking at the content, I thought we'd start by talking about how to approach HSC economics. So first things first, I think you've got to find your best study method. Economics is a little bit of a weird subject in that, like, yes, there's a lot of content to know and a lot of just memorization, but you do also have to know like a lot of different, like how to graph. You have to know a lot of statistics. You have to know like just a whole bunch of random things about like the budget and things like that. And you've got to be really up to date with your economics. So studying for ecos can be a little bit different to your other subjects. For me, I preferred learning by watching videos and anything to do with the graph. I liked to annotate my graphs. I think annotating graphs helps you get a better picture of what's actually going on within the graph. And also doing practice papers. I think everybody should be doing practice papers, not just some people. Especially a lot of people think, leave the practice papers to when you're getting closer to trials and things, but start now. I'm assuming most schools do topic 1 in term 4. So start looking through HSC papers, other past papers, and picking out questions about topic 1, particularly essay questions. With economics, the essays can be super, super overwhelming because they can ask you to write an essay on literally anything you've learnt from the beginning to the end of year 12. So start looking at those past essay questions and stuff now. But yeah, just really try and nut out what your preferred study method is going to be. I think knowing how you like to study now will really help you along the track, creating good habits before your big exam blocks, so before your trials and the HSC. Again, with economics, better to understand things to memorize them. You really want to try and think about the content you're learning about and really try and understand what's happening, why is it happening, things like that. I think with economics in particular, just trying to memorize things is not going to get you a top mark essay or a top mark short response question, because your markers are really trying to see if you can create your own judgments about what's going on, if you can sort of give your own interpretation or a unique perspective on what you're learning about. Because a lot of economics or economic essays, I should say, is about providing a judgment on what's happening, whether a policy is effective or not, things like that. So it's really important you understand, the rationale behind a certain policy. And once you understand, the rationale behind it, then you can create a judgment, an effective judgment, which will give you that higher response, essay. With economics, it's super important that you are really, really on top of your stats, case studies, trends, things like that, and to collate all these statistics in whatever's an easy form to you, whether that's a graphic, just one big document that's got all your stats on it, whether that's flashcards, anything like that. Just have your statistics somewhere easy to memorize them, and yeah, just be really, really on top of them. Try and get them throughout the year. I think if you try and pick up your stats and find case studies and things like that as you're learning about the content, it seemed a lot more approachable than trying to find statistics for every single thing you've ever learned just before your trial period. So try and get those stats as you're going. Doesn't have to be a lot, just a few stats for each sort of thing you're learning about, a few examples of policies, trends, things like that as you go along. And then just be super familiar with your syllabus like every other subject. And like I said before, start looking at your essays now and writing those essay plans. Just another thing a lot of people get confused about is the contemporary economics understanding. So I thought we'd talk about it before we start looking at the content. So a lot of people ask, if I'm studying economics, do I have to read the news or watch the news? I would say it's good to read the news. I wouldn't say it's a must. If you don't have time, you don't have time. If it doesn't interest you, don't stress about it. But it is good to sort of know, if you're spending 10 minutes a week, say that's on a Sunday night, just thinking about what's happened in the economy in the past week, it'll give you some really, really good statistics and examples to plop into your essays. So that's can be Sydney Morning Herald, ABC, if you've got the Apple News app on your phone, SBS, the RBA News, things like that. It's just like using quotes in English. the more you look at your quotes, the more you sort of expose yourself to those quotes, the better you're going to understand them and the more you're going to remember them. The other thing is, a lot of people ask is, in terms of the word contemporary, how current do statistics need to be? So you sitting in economics don't need to know any statistics pre-1990s. I would say avoid giving like current examples from things before 2008 unless you don't have another choice. Generally, 2020, 2021 is accepted as current, and your HSC paper is usually written around the middle of the year. So they're not going to be expecting you to have statistics from like the day before your exam. Like it's not like that current. But there are a few exceptions to that rule. The things that you should always have the most up-to-date examples for are cash rate, your economic growth rate, exchange rates. Unemployment rate is also a really good one to have. So there are a few examples of statistics and things that I would recommend having the most up-to-date example for. But in general, your examples 2020, 21 post that is fine. I would also say if you are going to be talking about the budget in your essays or like in your exam papers at all, do try and have the most recent budget and like be up to date with your policies. Though I will say the one exception to having current statistics, I will say, is if you want to talk specifically about the GFC in 2008, that's fine as long as you do mention that you're specifically talking about the GFC and like there's a point to talking about it. So for those of you who don't know, that's the global financial crisis, 2008. And talking about COVID as well. So some people will say that 2020 may not be current, but I will say if you're going to talk about it in context of like COVID shutdown and stuff, that's all fine. And then the other big question, how are you meant to remember all of this? So tied in with your theory, I think for me when I was studying economics, like making the statistics relevant to my theoretical knowledge helped me understand like, okay, like this statistic actually makes sense. It makes sense that the unemployment rate was so high in COVID because of like shutdowns and like the derived demand for labor and stuff like that. I also think color helped a lot. So for me, whenever I was writing my notes, if I had a statistic, I would change the color of the text. So all my statistics popped out. And so funnily enough, like in my exams, like I remembered things based on what color they were. And that really helped me. As well as summary tables and graphs. Try and make things as succinct as possible. All in all, you can write 20 pages of notes for topic 1, but you're not going to be writing 20 pages in your exam, right? You're going to need to know the key points, and then you can elaborate on that in your exam. Quickly, just a little bit of mention to COVID. You guys are really lucky, I guess, in terms of economics, that you are doing economics post-COVID, because COVID gives you a lot to talk about. There's so many things you can pick out for COVID. Thinking about economic performance since the GFC, like it was so bad. Understandably so bad, but it gives you a lot to talk about in terms of economic growth. The fact that our economy was contracting for the first time in 28 years. In that first March quarter for 2020. And then also explaining in Australia that some of that can be explained by the bushfires, and then the early response to COVID, travel bans, again with economic growth, thinking about our GDP and how it shrank, and comparing that to past records. Super important to know your economic trends. So COVID is really good in that it sort of goes against the trends in Australia, and it's good to talk about. It gives you complexity to your essay. Thinking about how much money Australia spent on COVID. This is also going to become really relevant in topic 3 and topic 4 when you start looking at fiscal policy, because it's really important to talk about that. Australia is trying to contract our budgets because we spent so much money in COVID, and so it'll take years and years and years, but the government is slowly trying to spend less money so that we can start to repay our COVID debt. But then with Australia, also talking about how in COVID, a lot of our goods and services, I shouldn't say services, a lot of our goods, we still traded. So like relative to the rest of the world, not that Australia by any means was in a good position, but relative to the rest of the world, we were like comparatively in a fairly okay position because we export a lot of like raw goods, so like, you know, from like mining and things like that. So relative Australia was actually not in that bad of a position because of what we exported and because our government spent so much money. So from that, you can also say we recovered really, really quickly. The recovery from COVID is a really interesting thing to talk about in your essays, if it fits, because it was a really quick recovery. And it's also good to talk about because you can talk about like the pros and cons of that. And that, like, yes, we recovered quickly, but we recovered quickly because we spent billions and billions and billions of dollars. So, you know, talking about the pros and cons of, is it worth going into long-term debt in order to have the short-term recovery from COVID? And talking about like, why would it be worth it? So that thinking about things like quality of life, employment, Australia's economic growth, international trade, and then the cons of, we're going to be paying off that debt for years. Like there's a lot of things, if you like read about it, which hopefully you should be doing, saying that, like, you know, our grandkids are still going to be repaying COVID debt because the government just spent so much money. So you can talk about the pros and cons of that recovery. And then, like I was saying before, Australia's health and economic outcomes were actually like they weren't good, but they were favourable in relation to everybody else. Our economies outperformed all major advanced economies in 2020, and our labour market had a really quick recovery. So this will be really interesting in topic 3 when you guys start learning about the labour market and like employment. In that we had a really big spike in unemployment, but when you look at how that recovered, it was actually a really good recovery, and we reached our Nauru fairly quickly. So yeah, compared to other major advanced economies, Australia was the first economy to have seen hours worked in employment recover to pre-pandemic levels. So you can talk a lot about that as well. So that's actually really interesting to talk about in topic 1. When you start to talk about like trade and financial flows and things like that, you'll start to see that Australia's trade and financial flows during COVID, like, yes, they shrunk, but they did not shrink as much as pretty much the rest of the world, because Australia exported lots of like natural goods. So pandemic or not, people need coal, you know, people need our farming exports, things like that. So it's stuff like, because Australia exports all those essential goods, our trade flows are actually not that bad comparatively. And so, yeah, the outlook for the global economy has strengthened. Global GDP is forecast to grow by 6% in 2021. So that was the statistic at the time. Important also to be aware of comparing like outlooks to reality. So the outlook was 6% in 2021. Compare that to what actually happened in 2021. And you can compare that and discuss that as well. So yeah, that's a bit of an overview and just a quick chat about COVID, because COVID is such a good example to talk about in your economics essays. So you guys are lucky that you're like post-COVID. So yeah, without further ado, let's get on to the main bit of today, which is talking about the global economy. So economies of individual countries are linked together because changes in a single economy have ripple effects on others. So this reflects the total amount of measurable economic activity going in the world. And this all happens due to globalization. So globalization is the process of increasing the integration of economies throughout the world. So this is why changes in one economy or one country are going to link to changes in another economy. You know, for example, should there be a fall in GDP in Australia, that's going to affect our exports. Our exports will then affect all the countries who we export to. Then, you know, all of a sudden they don't have the right imports, then they can't produce what they need to produce, or their quality of life decreases, etc., etc. And you just start this big chain of events in the global economy. So as a proper definition, globalization is the potential and actual movement among nations of labor, investment, finance, trade, technology, and transportation. So super important that you know these are like your big 6 things that you're going to talk about if you want to talk about globalization, particularly if you're talking about globalization in terms of an essay question. You could break up your response in terms of that lift. So that's labor, investment, finance, trade, technology, transport. Obviously, you don't have to talk about all 6 if you're talking about them in an essay or even in a short answer, but those are some of the topics that you could use to sort of break down that response. So that lift are the major indications of economic integration, which increase your globalization. So yeah, pretty much if you're thinking about the current economy, or the current global economy, it is very, very heavily integrated. So things or economic events in one country are really going to impact other economies, particularly your big major economies. So for example, with Australia, should there be a fall or something going wrong in the American economy, Australia would really, really feel it. As evidenced by the GFC, that all started in America. And so that, because America is such a big economy, the integration of pretty much every other economy in the world with America caused the GFC. And it's why that one change in America caused this big ripple effect. That being said, Australia actually did pretty well in the GFC. Again, the government spent a lot of money to protect ourselves, so it wasn't too bad, but Australia did feel the effects, and it was quite a big economic shock in Australia. So next, taking a bit of a look at GWP, so gross world product. So gross world product is the sum of total output of goods and services by all economies in the world over a period of time. So if you add up the GDP of all economies, you'll get your GWP, or your gross world product. So your GWP is calculated by the World Bank and measured in USD. So you'll see that most global indicators of economic activity or economic output are measured in USD, because your US dollar is typically considered the strongest dollar, because the American economy is typically considered the strongest economy in the world, or at least traditionally was considered the strongest economy. That's changing a bit, and we'll talk about that a bit later, but yeah, so anytime you see like big global statistics, unless said otherwise, assume they are in US dollars. So yeah, your gross world product is a good statistic to know and to be up to date, or as up to date as you can be on it. So it's a good indication of how the global economy is doing at any point in time. So for example, like if you compare the GWP of like, let's say mid 2020, when COVID was like running rampant, to like right now, you would see like such a big difference. And that is a really good indication of how shutdown periods, decreases in trade, things like that or increases in unemployment can cause a decrease in global economic activity, using your GWP as one indicator of global economic activity. So for example, the 2019 estimate for GWPs, this is a pre-COVID statistic, was 143 trillion. So it's important to know that your GWP is calculated in terms of your purchasing power parity. So essentially the PPP essentially is accounting for the fact that changes in exchange rates and inflation rates between economies will change how much a good is worth, how much it sells for, how much it costs to produce it, things like that. So whenever you see something's calculated in terms of purchasing power parity, it essentially means that the World Bank is trying to account for differences between economies to get the most accurate reflection of economic activity in the world. So you can see between 2014 and 2017, your GDP growth, according to the IMF, had increased and was forecasted to decrease in 2019. Then if you can find the statistics for 2020, 2021, 2022, you will see generally a trend of decreasing GWP or GDP. So some more trends about GWP and the global economy. So your GWP in 2016 was over 50 times the GWP in 1960. With economic trends, and whenever you find them, I think it's important to try and explain like why is that the case. So why is GWP 50 times what it was in 1960? So examples for that: increased economic integration, increased globalization, advances in technology, advances in transportation, allows things like greater imports and exports into an economy, which means more people can buy and sell, things like that. Growth in GWP has slowed since recovering from the GFC. So one reason for that being that government spent a lot of money in the GFC to boost the GWP. And sort of as that GWP was boosted, government slowly started taking money back, or not taking money back, but stopped investing so much money because the economy no longer needed such a boost. But without that increased investment, your GWP is still growing, but it's growing at a slower rate. So the GFC of 2008 to 2009 led to the first downturn in global output since 1946. I think this is pretty self-explanatory. Major financial crisis, a lot of people lost jobs. People don't have jobs, people don't have money. No money, no spending, essentially. And especially when people lose their money or lose their jobs, they're forced to rely on their savings. And so typically when individuals are forced to rely on their savings, they're less likely to make discretionary purchases. So essentially they're less likely to make non-essential purchases because they are on a finite resource of money, because they don't have money coming in every week, month, year, whatever, from employment. And in the final trend, growth of the world economy slipped from 5.1% in 2010 to 2.9% in 2013. Again, similar to the recovery from the GFC, just less money being inputted into economies because economies were slowly, across the world, were slowly starting to gain their feet again. So in the recovery from the GFC, they were so slowly starting to become more independent, less reliant on government help as well. And also from that, increases in globalization also meant that a lot of companies had to spend a lot of money on increasing technology, increasing their transport. So they had less money to input into product, which can lead to decreased GWP and GDP. Okay, so some more trends. 2013, 2016, GWP growth remained below average. During the GFC, advanced economies contracted by an average of negative 2.7%, whilst China and India had slower but positive growth. So this is a really interesting statistic, especially if you are going to talk about the GFC, which I think the GFC is a pretty good example to talk about with a lot of your globalization stuff, GFC and COVID, because it really shows how dependent economies are on one another. So it's important to think about why might economies, so at the time China and India, so economies like that, why might they not have negative growth? Okay, one of the reasons for this being is that a lot of advanced economies didn't want to, invest, trade with, have relations with China and India, because at the time they weren't seen to be as strong of an economy as, say, the EU or the US. And because these economies were newer and still fairly emerging, they were less reliant on the rest of the world. So essentially, they weren't as reliant on the US. So when the US crashed, yes, they still felt some effects, like economies are, you could say, are all integrated to some degree, but they weren't as strongly tied as, say, Australia would have been, because they were fairly newer economies. And so their positive growth lessened the fall in world GDP to only negative 0.5% in 2009. So some more recent trends, looking at the impact on the global economy, still thinking about GWP, is that COVID-19 has had a really big impact on the global economy. Like I said, super important or super good examples to talk about are the GFC and COVID. So projected global growth at June 2020 was 1.9% below the April 2020 World Economic Outlook. So this can just show how economies during COVID, when they were essentially isolated from one another, there was a really sharp turn in economic growth across the world. And so the spread of COVID-19, in addition to the lockdowns worldwide, have slowed recovery to pre-pandemic economic growth levels. Although, like I said before, Australia is a bit of an exception to that. Relatively, we did pretty well. So that's a really, interesting point to include in your discussion of COVID, is Australia's uniqueness to these general trends in recovery to pre-pandemic economic growth levels. And that's just a little link there if any of you guys are interested in looking a little bit more at that. So moving on to the global economy. So, we're still in the global economy, more globalization, specific indicators of globalization. First one being increased trade in goods and services. So as a general trend across the past 50 years, there's been an increase in the trade of goods and services because of technology advancements in transport and communications. So because countries can communicate better with one another, it's easier for, say, somebody in America to order a product in Australia because of increased internet and telecommunication. There's an increase in plane services, plane efficiency, boat efficiency, train efficiency, things like that. And there's been a large increase in global trade in goods and services. And this is good because countries don't produce all goods and services that they need as efficiently as another country may produce them. So therefore, the countries that can't produce these goods as efficiently import these goods and services because economies don't produce all items that they need. They will only produce those that they have a comparative advantage in producing, which hopefully you guys are recognizing this as a little bit of a sideways way of talking about opportunity cost. But yeah, economies will produce the goods they have comparative advantage in producing because they are the goods that they can get the most money out of selling. And the more money they have, better of quality of life that they can have, and then therefore increased money they can still buy the goods and services that they don't have within their own economies. So a lot of governments have actually encouraged trade and trade liberalisation, including the removal of protection, in order to encourage economies to only produce what they are efficient as producing, which gives them a greater flow of money as well. So between 1990 and 2016, you can see a rapid increase in the trade of goods and services. So in 1990, 30% of global output happened as a result of trade in goods and services, increasing to 58% in 2016. So the annual growth in the value of trade is generally twice the level of world economic growth, which just gives you a bit of a picture about how important it is. As well as new technology in transport and communications have also reduced costs of trade. The more efficient transport and communications are, essentially the less they cost, which is why a lot of companies, as well as a lot of governments, invest a lot of money into transport and communications as well. So, looking, I guess, at this little table, we've got changes in composition of global trade. Okay, so how has the composition of trade changed? So essentially, how has it changed what goods and services are traded? So global trade is still dominated by manufactured goods, including cars and electronics, although it is declining. This is because not every economy can produce these efficiently because they are really expensive to initially set up production. So for example, Australia does not manufacture many manufactured goods. We used to do manufacture cars until the protection was removed on that industry because Australia just could not do it efficiently. So because of this, that's led to a demand for energy sources because the more you manufacture, the more energy you need. So things like oil and coal, which is really advantageous to Australia. And one of the big reasons why Australia did so well during COVID was because Australia has big amounts of those minerals. So the thing is, energy is something that people are going to need, COVID lockdown or not. People are always going to need energy, which is why Australia, just did so well during COVID because people still needed our goods. And your big services, finance and communications are growing. In Australia as well, education is becoming a really, really big service that Australians export. And then changes in the direction of trade is the other big thing you want to think about when you're talking about trading goods and services in relation to topic 1. So your fastest growing economies, China, Indonesia, Vietnam, have had a rapid increase in trade. This is because as they're getting bigger, they can both produce more and also have more money to then demand more. So you can see an increase from 7% to 19% for those really fast-growing economies. That being said, high-income economies are responsible for the majority of international trade, things like the US and the EU, but that's a lesser percentage from 82% in 1995 to 66.5% in 2015. So keeping on going on with the indicators of globalization, the next one we're going to look at is financial flows. So as a general definition of your financial flows are movement or the flow of money between countries in the short term. So it is the most globalized feature because money can move freely between nations. With the introduction of electronic banking, it is pretty much instantaneous to transfer money, let's say from Australia to Russia, for example. You can pretty much do that instantaneously, despite the thousands of kilometers that separate Australia and Russia. And this has been encouraged by the fact that countries have relaxed rules in regard to finance since financial deregulation of financial systems sometime in the 1970s or 1980s, depending on the country. So because of financial deregulation, it is so much easier for individuals to send their money here or there, for companies to trade or flow money between countries as well. The next big indicator of globalization is going to be our technology, which we've talked about a little bit. So technology has been the major driver of growth of global financial markets and has linked financial markets. So essentially, your financial flows have grown since the 1990s, although they fell during the GFC, but have since had a strong recovery because technology has allowed things like the Forex to exist. So the Forex is the foreign exchange markets where buyers and sellers exchange one currency for another. Technology has also allowed for individuals and companies to invest overseas. So it's easier for an individual in Australia to, say, buy stocks or shares in an American company because of technology connecting the two countries. So technology really is the big, facilitator of a lot of globalization. So the next thing I want to look at with you guys is globalization. Why do I keep saying globalization? Investment and transnational corporations. So there's two big types. So this is something that you guys are going to talk about so much in topic 2 when you look at the balance of payments. Unless you've already looked at the balance of payments, then you're going to know what I'm talking about. But your two big types of investment are foreign portfolio investments and foreign direct investments. So foreign portfolio investments are short-term speculative shifts of money as finance when you buy less than 10% of shares in a company. So this is essentially buying and selling of shares or securities in existing companies worth less than 10% of the entire company. So it's short-term, it's when people buy some shares, they wait until they grow or sometimes until they fall and sell them off. So your short-term speculative shifts. It happens a lot because people are like, let's say like a lot of people in COVID are like, need to buy like health supplies, so I'm going to invest in like a health company and, hoping that health company increases in price, which means they can sell off their shares for higher price, make profit. The second type of investment is foreign direct investment. So this is long-term financial flows of money to establish businesses and existing companies, or to buy a substantial proportion of shares in an existing company in order to play a management role in the business. So your foreign direct investment is when somebody buys 10% or more of a company, or they establish a completely new company. And the thing that differentiates your foreign direct investments from your foreign portfolio investments is that FDIs, so your foreign direct investments, are when investors want to play a role in management of the business or the company. And in order to do that, they need to buy 10% or more of a particular company. So some trends in investment in the transnational corporations. So your foreign direct investment flows fell a lot during the global recession due to ongoing policy uncertainty, geopolitical risks. People didn't know what was going to happen during the GFC, so they didn't want to spend a lot of money essentially buying a company out, buying at least 10% of a company, and they didn't want to play a management role when there was such uncertainty and risk going on in the economy. So the OECD expected FDI to fall by around 40% in 2020, and FDI inflows traditionally favoured developed economies, America, Japan, the EU, things like that. The reason for that being is there was more certainty investing in developed economies. There was less turmoil, there was typically less political risk, and typically you could just predict what was going to happen to shares in a developed economy, which is why those inflows typically trend towards those economies. On the other hand, developing economies such as China, India, Brazil, and Mexico have seen an increase in FDI flows as they become, bigger players in the economy and grow in size. So currently, FDI inflows to these countries have received more than 50% of total inflows. So they do have a really, really big share in recent years. And developing and transnational economies significantly increasing share of FDIs as well. So now looking at technology, transport and communications. Again, we've sort of talked about this, and I think with technology, transport, communication, it's quite self-explanatory. I think the big thing here is just to talk about some of these statistics. But essentially, developments in freight technology such as containerization has led to greater trading goods. Essentially just means that more goods can be transported at once. It's easier to transport goods, more efficient to transport goods. Say with things like technology, internet users have increased 12% to 33% from 2000 to 2010. So you can see there's a lot more people on the internet. Technology is becoming a lot more advanced, and a lot more people across the world is getting connected. And important communications technology links businesses and individuals in the global economy, which means that there is a decrease in costs because it's so much easier and quicker to talk to somebody say in America from Australia. And like we talked about, technology facilitates the movement of money as well. Another thing to talk about in regards to globalization is the division of labor and migration. So because it's easier to transport not just goods, but to transport yourself from, say, Australia to London, that used to be like a months long trip. Now you can get on a plane and it'll take you probably about a day to get from here to London. So this has led to an increase in the number of people moving away from their country of birth to foreign locations. So there's a current estimate that 3% of people work outside their country of birth. So labour is the least globalised feature because while it is easier to get from one place to another, in order to work in another country, there are a lot of national barriers, immigration, legislation, language differences as well. And if you just want a bit of a, finite, definite definition of migration, migration is the movement of people between countries on a permanent, long-term basis, usually for 12 months or longer. So the reasons for migration is that countries can utilize labor skills at a lower cost. They can locate industries offshore to emerging and developing countries for job displacement in advanced economies. So essentially what this means is that big transnational companies will recognize, okay, it's cheaper to produce this particular thing in this country. So what they'll do is they'll offshore it and they will produce all of that particular thing in one economy. And they'll use people from that country to produce it. And essentially what that means is that jobs in advanced economies become displaced because they are no longer the cheapest place to produce something. A good example of this is Apple. If you Google like Apple production process, you'll see that a lot of the specific things that go into Apple phones are produced all across the world, wherever they're cheapest, and then they just get put together in California as well. And so then going across from that, we've got the International Division of Labour, which is essentially how tasks in the production process are allocated to different people across the world. So highly skilled individuals are attracted to rich economies such as the USA, which has resulted in brain drain from Australia. So essentially what brain drain is when people study in Australia because for whatever reason, maybe that's you were born here, you study here. If you're from overseas, maybe it's cheaper to study here than your home country. For whatever reason, people study in Australia, but then as soon as they've got their degrees, they'll go off to richer economies, such as the USA, where their particular skills are going to be rewarded with higher wages in another country. A big example of this is people who study things like medicine. They'll study it in one economy, which is where they... for whatever reason, that's where they got in. It's cheapest there. They had family there or whatever. And then they will take their medicine degree and they will practice overseas somewhere because it pays better. And that's a really good example if you want to look it up about like the medicine brain drain. Not just Australia, it happens all across the world, particularly in a lot of developing economies as well. But that's just one example of something you can talk about with the international division of labour and a potential disadvantage of globalisation as well. Okay, so that wraps up our power run through globalisation. The next thing we're going to be looking at is the international business cycle and the regional business cycles. So this is a little bit of a shorter bit than globalisation was in the global economy. But your international business cycle is essentially the fluctuations in global economic growth. So it's pretty much measuring and tracking how does GWP increase and decrease, why is it increasing and decreasing, how can we help stabilize it, things like that. Generally, the global economy tends to experience recessions and booms at the same time. So essentially what that means is that typically countries tend to experience the same things at the same time. Of course, it's not exactly in sync and it's not always to the same degree, but it's rare for, say, America to be experiencing a really big boom and, say, the EU is now in recession. So typically things do tend to sort of line up between economies. So a boom or a peak, so that's the highest point or like a relatively high point in GWP, is when investment and consumption worldwide is high. People are spending a lot of money, there's a lot of imports and exports going between economies. Employment is high due to high economic growth, and your interest rates also tend to increase to combat inflation. With interest rates and inflation, don't stress yourself too much about that now. In topic 3, you do a whole thing, and topic 4 about inflation and interest rates. So don't stress if you don't understand why that happens just yet. So we've also got downsizing. So downsizing is when there's falling demand and output as a result of rising rates of unemployment. And an example of this is the onset of the GFC 2007 and 8 and how that impacted the European sovereign debt crisis in 2011 and 2012. So downsizing results in troughs or recessions in the international business cycle, and a trough, for example, in a regional business cycle can then translate into a trough in the international business cycle as well. So then, of course, we've got the impact of COVID on the IBC. I'm telling you, COVID will come up with like every single thing you do this year, so get used to it. Start loving COVID, I guess, in relation to economics, not in general. But yeah, pretty much a reduction of trade and investment has led to a downsizing in the international business cycle, fairly self-explanatory. Something else interesting to consider is Brexit. So a lot of people predicted that Brexit will result in the reduction of the EU's overall GDP. Will be really interesting to look at and to find the actual statistics about how Brexit changed the EU's GDP and then how that change in the EU then impacted the international business cycle as well. So some key factors to consider with changing international business cycles and regional business cycles. So first of all, changes in trade flows. Low demand means there's low trade, decreases economic growth, and on the converse, high demand, high trade, high economic growth. Okay, so that's one of the big factors that changes level of activity in the international or regional business cycles. You've also got investment, so big economic events will decrease investment because people have less discretionary income, such as in the GFC. You've also got interest rates. So typically looking at interest rates, they are influenced by one another, so there is political influences. So for example, if the USA interest rates are low, other countries typically tend to do the same thing as the US. High interest rates dampen economic activity, low interest rates stimulate it. Again, don't stress too much about interest rates. You'll start looking more in depth at interest rates in topic 2, and then you do a lot of them in 3 and 4. So don't stress if you're confused about interest rates right now. And then also just looking at financial markets and like overseas confidence. So Australia's share prices typically reflect the USA, so typically they're high. But the more confident people are in the economy, the more likely they are to invest. More investment means more demand, more trade, more economic growth, and leads to peaks in international and regional business cycles as well. So your regional business cycle then, fairly self-explanatory, but just as a definition, are the fluctuations in the level of economic activity, such as output, trade, and financial flows in a geographic region of the global economy over time. So, for example, the sovereign debt crisis in Greece impacted the world, but more specifically, geographically impacted the EU area. So that includes 27 countries in Europe that are part of the EU, and then those three largest economies are the UK, Germany, and France, which are all also relatively really big economies in the world. So typically, changes in the regional business cycles of the EU area do tend to translate to changes in the international business cycles. So they are really linked together, those two. So some regions to consider if you want to talk about regional business cycles is North America. So how changes in the US will have more of a direct impact on Canada and Mexico first, before they then impact the rest of the world. The East Asian region as well, dominated by Japan and China. And alongside that, it's important to note that Australia are more integrated with East Asiana region. We're not completely integrated in the East Asia region, but we're more integrated with them. Hence, recessions in Europe and the US don't tend to affect Australia as much. Like Australia, don't get me wrong, is very impacted by them still, but just not as much as, say, Canada is going to be impacted by a change in the USA. Australian exports also are now more dependent on the Chinese business cycle and demand in China as well, because of how much we export to China as well. And just as like a general fun fact, Australia is one of the only countries that export more to China than we import from them, like relative to like population and stuff like that, which is just like a random fun fact for you. So yeah, we are almost halfway through today's lecture. If you guys do have any questions, feel free to keep asking them in the chat if you guys are watching it live. Otherwise, we will move on to talking about free trade. So starting with the basis of free trade. So trade is essentially the movement of goods and services across national borders. And then free trade is when there are no artificial protective barriers. So that being tariffs, quotas, and subsidies, the big three you need to know about in Year 12 economics. So there's no artificial protective barriers put in place by governments so that there is free movement of goods and services across national borders. So a country has an absolute advantage in production of a product, if there has more output with a given level of resources than in another country. So essentially there's higher productivity. So comparative advantage is the basis or the rationale behind trade, essentially looking at opportunity cost. You want economies to only produce the goods that they're efficient at, and so in order to get other goods that they're not efficient at producing, then they must be able to trade between economies. So looking at something you would have done in year 11, is opportunity cost, so which is essentially what we've been talking about. So a country has comparative advantage in production if it is comparatively more efficient in production measured by a lower opportunity cost. So the country with the lowest opportunity cost is said to have the comparative advantage. So there's two ways we can sort of think about opportunity cost. Number one, opportunity cost can be the total revenue minus economic profit. Or opportunity cost, more commonly sort of what one has to sacrifice over what they have to gain. And so the less you have to sacrifice, the lower your opportunity cost is going to be, and thus the greater your comparative advantage is going to be. So when we're thinking about free trade, we want to think about advantages and disadvantages of why might an economy want to participate in free trade. Now, it may seem fairly self-explanatory of like why an economy would want to, but we'll talk about the advantages anyway. So the first being that economies can obtain goods that they otherwise wouldn't be able to produce, or that they're otherwise unattainable, because one economy cannot produce every single good and service they need themselves in sufficient quantities to satisfy domestic demand. Generally, due to a lack of resources, you can't produce every single thing because you just don't have enough labor, don't have enough machinery, things like that. Second big advantage is it enables the efficient allocation of resources. So generally, countries only produce the goods in which they have the comparative advantage, because otherwise resources aren't being used efficiently, or they're going towards inefficient industries. So for example, if you ever want a good example to talk about in an essay or a short answer question, talk about car industry in Australia. So much protection on it, and it was so inefficient, and Australia was spending so much money producing cars that we just would have gotten so much cheaper if we just gotten them overseas. So yeah, that's an example of how resources can be going to inefficient industries. Therefore, labour was reallocated to more efficient industries such as tourism and services, when protection was removed from the car industry in Australia, leading to a more efficient allocation of resources. So Australia was essentially like getting more bang for your buck, essentially. You've also got increased economies of scale. So essentially, economies of scale is something you would have looked at, I think at the very beginning of year 11 you do it. And essentially, it means that there's going to be a lower average costs of production and increased efficiency and productivity if economies are only producing things that they're good at producing. So this includes things like getting more manufacturing goods. So an economy is really efficient at producing something, so they've got a lot of money, and then they buy some machinery that then can produce that good even more efficiently. Because the good can be produced more efficiently, it costs less to produce every single good, leading to the economy of scale. Free trade also leads to innovation because it encourages new technology and production throughout the world, and it increases living standards because things have lower prices because there's no protection attached to things, so there's no tariff that must be transported onto the consumer in order to afford it from the business. It increases production of goods and services, which means that there's more choice as well and less people have to miss out. It means that countries have access to goods that lack natural resources that may prevent their production. So for example, countries like Australia can produce a lot of say coal and oil, but other economies that lack the access to those natural resources because geographically they just don't exist in that area now have access to those resources. And opening up of global markets also means higher rates of economic growth and increased real incomes as well. Now, the converse to that, why wouldn't you do free trade? Because it seems pretty self-explanatory. It seems, why wouldn't economies want to do that? Well, there are a fair few arguments against free trade. I'm just going to have a quick drink. So, the first disadvantage of free trade is looking at the short term. Or the majority of disadvantages to free trade actually look at the short term. But first of all, there's an increase in short-term unemployment when protection is removed from an industry. So for example, the government is going to increase a quota, they're going to decrease a tariff or decrease a subsidy, which means that they are taking away protection. Quick note with that, a lot of people get this confused. An increase in a quota is equal to a decrease in protection because increase in a quota means overseas producers can bring more into Australia. Something important, people get confused a lot. Make sure you remember that. Anyway, so domestic businesses may find it harder to compete with imports if they're not as protected. This is because they're just not as efficient as importing businesses, which means that people are going to buy imports because they're cheaper, because the more efficient something is, generally the cheaper it is. However, long term, this should correct itself because as things become inefficient and as unemployment rises due to a business collapsing, that employment should then be reallocated towards areas with a comparative advantage. So long term, this should correct itself. Keyword there being should. A lot of people say, who's to say that it's actually going to, but it is one reason to consider a disadvantage of free trade. Second being the infant industries argument. So it's difficult for new industries to establish themselves in a global market. So without protection or protectionist policies, industries or particular businesses don't have enough means or resources to establish themselves with a significant market share in the global economy. So this is because larger foreign companies are able to produce things at a lower price because they've already established themselves. So without protection, industries cannot establish themselves because they just cannot produce things at such a low price. Again, a lot of people say that this should either correct itself, and that as industries start small, get bigger, or B, we should just be allocating resources to where we can produce goods at a lower price anyway. The third reason is dumping. Now, dumping is typically the only disadvantage of free trade that economists generally agree on. It is probably the one problem with free trade that cannot organically be fixed. So essentially that in the long term essentially won't correct itself. So essentially what dumping is the production surpluses from other countries are sold at unrealistically low prices in a different country. And it does hurt efficient domestic industries. Now, essentially, I'll give you an example. Is, for example, if, let's say, China was producing like red t-shirts at a really, really high rate. They were very, very efficient at it. And they expected that a lot of people in China wanted to buy red t-shirts. Now, let's say people in China actually decided, no, we want to buy, we want to buy pink t-shirts instead. So what happens then is China has become really efficient at buying the creating the red t-shirts, but they have a lot to spare. So what they do is they take those red t-shirts and they say, no, we're actually going to import these into Australia, but they really want to get rid of those red t-shirts. They don't want them anymore because they want to start producing the pink t-shirts. So what they'll do is they will sell those red t-shirts in Australia at a really, really low price so that they're really attractive to Australian consumers. And therefore, Australian consumers choose to buy those red t-shirts that have been imported from China rather than the red t-shirts that have been made from Australian producers. So it does hurt domestic industries, and it cannot organically correct itself. And it happens with all sorts of goods, things like, let's say, America producing like pink drink bottles at a really high rate. And, even if people in America still want the pink drink bottles, the producers in America might say to themselves, actually, you know what? Let's just import some of these into Australia. We'll sell them at a really low price anyway. And so now all of a sudden people in Australia are buying their pink drink bottles from an American company because they're so much cheaper than buying the pink drink bottle in Australia. So yeah, that dumping is the one disadvantage of free trade that is generally agreed upon by economists. And then you've also got free trade can encourage environmentally irresponsible production methods because producers may participate in environmentally damaging practices if it means that they can produce their products at a lower cost, because lower cost means high profit. And without protection or without government intervention, this leads to negative externalities such as high pollution, degradation of the environment, decreased water quality, decreased air quality, things like that. So that's pretty much the big things that you need to know about free trade. The next thing we're going to look at is international organizations. So your international organizations are actually, I consider them quite interesting. Maybe you won't find them interesting, we'll see. But they're something that do come up quite frequently, so they are important to know about. So we'll go through each of them one at a time. So we'll start with the World Trade Organization, or the WTO. Important to know, I guess, with international organizations, some key facts about them, their role, whether they're good at it, whether they're bad at it, and also, I guess, some examples of things they've actually done. So the WTO was formed in 1995, and it was the first international organization that actually had power to enforce trade agreements. So as of 2019, there was 164 member states with 19 states negotiating. And the role of the WTO was to liberalize trade by encouraging free trade policies. So for example, they reduced protection in agricultural industries and in the EU and the USA. So the WTO is good in that it actually does have power to enforce different policies. They promote non-discrimination in trading policies. So essentially, protection concessions granted to one country should be granted to all. So essentially, like any, not even just protection, just concessions granted to one country should be granted to every single country to promote equality between trading economies so that no economy is disadvantaged based on the WTO's actions. They also have a big role, and probably the most important feature of the WTO is to dispute or to resolve disputes in trade. So a country suffering economic harm because another country has not completed with the WTO or complied with the WTO ruling can lodge a plaint with the WTO. WTO panel will then hear the dispute and make a ruling between the two economies that must be followed. So, like I said, probably the most important feature of the WTO, because it is one of the only governing bodies that actually has power to do something about the dispute, rather than just be like, oh, you know, like you should do this. Like, no, like the WTO actually can enforce that ruling. The WTO can be considered effective in resolving disputes between smaller countries. Keyword being here between smaller countries. Because in 2011, there's something known as the Doha Round, which if you are interested, and I do encourage you to have a little bit of a Google search on the Doha Round. So essentially they tried to, in 2011, advance trade liberalization. However, there was slow progress made to the Doha Round, which meaning nations such as Australia have created more bilateral and regional trade agreements in that time because of the slow progress to the Doha Round. So yeah, important to consider with each of your international organizations, are they actually effective or not? One of the most common questions you'll get about international organizations will be about effectiveness of these organizations and whether or not they actually did anything. So the next one we're going to look at is the IMF, the International Monetary Fund, which was created in July of 1994 and has 189 member nations. So the role of the IMF is to maintain international financial stability, particularly in the Forex. So keywords here is maintaining financial stability. So the IMF lends money to member countries that are having trouble meeting their financial obligations to other member countries. And in return, these debtor countries must undertake economic reforms by the IMF. Now, this is a really interesting thing to look at in the fact that the IMF is essentially saying, okay, like, you know, we're not part of your country, but if you're going to take money from us, you have to let us have some economic control over your economy. So it's a really interesting thing to look at and how effective it actually is when the IMF tries to undertake economic reform. So in a financial crisis, the IMF's role is to minimize the crisis by developing rescue packages to help stabilize the economy. So the IMF will require a country to change their economic policies before they receive assistance, which is, I think, a really key thing to talk about when you're talking about the IMF, that the change has to happen before they receive assistance, which in a lot of cases is not sustainable and it's not efficient to make a change in such short time and then receive financial assistance. So other banks require that these countries adopt these policies before they lend, and most countries have adopted similar economic strategies as well. So in talking about the effectiveness of the IMF, they did play a really significant role in restoring stability during the GFC by injecting $250 billion into the global economy to promote liquidity. So in case you guys don't remember, liquidity is pretty much like how easy can you actually access your money. So things like having money in a bank, or like having cash, very liquid. You can very easily get your money. Things like houses, not very liquid because you can't really that easily sell a house. So that's pretty much liquidity. The IMF just pretty much injected a lot of money into the economy so that there'd be a lot of money for economies to access when they needed to have stimulus packages within their economies. So the IMF pledged to have a bigger role in the global financial system as a result of the GFC. And they provided approximately $280 billion to member nations in COVID-19 loans as well. However, like with pretty much every organization, you're always going to have the however. The sovereign debt crisis in 2011 to 12 meant that the IMF and the EU provided bailout packages to Greece, Portugal, and Ireland worth over $600 billion. But they've faced a lot of criticism of specifically protecting Europe's monetary union and its bank. And it faced some really big criticism about essentially favouring the European economies. So if you want to talk about that in your essays, really important statistic to think about is that from 2011 to 2014, 80% of the IMF's lending went to just three EU economies, so Greece, Portugal, Ireland. And when you consider the fact that they are fairly sustained or established economies, you can sort of start to see where the criticism of favoritizing the European economies comes in there. So in return from a lot of that criticism, the IMF structural adjustments for the EU were to cut government spending, raise taxes, sell government assets, and decrease the size of the government workforce. However, the IMF did then report that the measures that they tried to implement worsened the collapse of Greece. So GDP fell significantly and unemployment in Greece rose to 25% when it was only predicted to be 15%. So this is sort of what I was talking about before when I was talking about it's really interesting when the IMF tries to implement economic reforms in a country that it doesn't generally have all the information on. It's really interesting when the IMF tries to establish these policies without consulting economic officials and economists in that country itself, which leads to things like the further collapse of a country such as Greece. Even though the IMF spent a lot of money on Greece and they tried to implement these policies, ultimately it still led to a worse outcome because the IMF typically doesn't have all of the information and doesn't have the best interests of that economy and that country and its people at heart. So if you're going to talk about the IMF, that's a really good, disadvantage to talk about as well. So then we've got the World Bank, which was created in 1944 after the role shifted from the European reconstruction post-war to addressing poverty and encouraging development. Now, important that you remember the role of the World Bank is economic development, not economic growth. So the World Bank is focused on granting loans to developing countries to reduce poverty and encourage development within these economies. Okay, super important. World Bank is about development, not growth. So the focus of the World Bank is to fund investment in infrastructure, reduce poverty, help countries to adjust their economies to the demands of globalization, and it's funded by contributions from member countries as well as from its own borrowing in the global financial market, which has a little bit of stipulations to that, but we'll talk about that in a second. So the World Bank aids developing nations by providing soft loans, which are essentially loans at little or no interest to developing countries for infrastructure, attracting private sector investment, especially to fund infrastructure, and providing grants as well. With the World Bank, it is important to notice that there is funds, it's funded by contributions from member countries, so to some degree there can be political involvement in where that money goes. If you look up the World Bank and its structure, you'll see that this is not such a pressing problem at the moment, but there is the potential for political involvement in where that money goes. So for example, let's say the US is funding a particular project. If they have particular economic ties or political ties to a country, they may choose that they want their money to go somewhere or not another place. So it's not such a pressing issue at the moment, but it is something to consider when you are thinking about the World Bank. Probably the most well-known international organisation amongst economic students before you start studying these is the UN. Established in 1945, 193 member countries, which is more countries than any other political or economic organisation. It does have a very broad agenda. So international peace and security, environment and refugee protection, poverty and development, international law, global health issues. I think there's also they have a particular group that helps what do we do if we find that aliens exist. The UN does a whole bunch of stuff. For economics, you just want to focus on these ones, in particular, the things that impact economic growth and economic development, as your big focuses for the UN. You would say that they can be effective, that they create international agreements to enforce human rights and political freedoms. There's the UN Global Aims that I'm sure a lot of you have seen to help reduce poverty and inequality between 2015 and 2030. And they build on the Millennium Development Goals that saw a reduction in the percentage of people living on less than $1 a day from 29% in 1990 to 14% in 2015. So that's an actual example of something the UN has done that could help you talk about why they're effective. You could also talk about how they can be ineffective in that particular countries can essentially veto decisions. You can talk about how the UN has an army that doesn't really have any power to actually do anything. So there are pros and cons to the UN as well. Next, we've got the OECD, Organization for Economic Cooperation and Development. OECD is where you're going to get a lot of your statistics about the HDI from when you're talking about economic development. So the OECD is an international organization that includes 35 advanced economies, and it comprises the main industrial economies of the world, with the primary goal to promote policies to achieve the highest sustainable economic growth, employment, and rising living standards in member countries, whilst also maintaining fiscal stability. So the OECD is essentially just a forum for discussion and coordination of policies rather than an enactor of these policies and discussions. In 2008, the OECD proposed the worldwide macroeconomic stimulus package. Again, that is just a proposal, like they can't actually do anything about it, although in Australia it did lead to a $52 billion stimulus package in Australia. So the OECD is really good for discussing economic issues, and it can be really effective in then leading to policies being put in place in different economies. However, the OECD will not actually definitively lead to the introduction of policies in Australia. So final few things we'll talk about the G7 and the G20 in terms of international organizations. Your G7 is the US, the UK, Germany, Canada, Japan, and Italy. You may notice that's actually only 6 economies because there was one economy that was removed from the G7. So the G7 has effectively operated as the economic council of the world's wealthiest nations. They meet annually to discuss conditions in the global economy, and its agenda includes political issues as well as current priorities such as climate change as well. So the significance of the G7 is declining because it doesn't include countries that have grown in economic importance, such as China and Brazil. It actually only includes, you'll see here, countries that were traditionally seen as the big powerhouses of the economy. So the G7 is declining for that particular reason in importance. So there also has been recent attempts to expand this group to including 5 developing countries that have become known as the Outreach 5. So that's Brazil, China, India, Mexico, South Africa. And again, this used to be the G8, but was expelled. Russia was expelled because of their violation of Ukraine's sovereignty in 2014. Now, similar to the G7, another forum you've got is the G20. So it includes the G8 and some of the emerging economies such as China, Brazil, Mexico, India, and Australia. And it does cover 80% of global GDP and 2/3 of the global population. So the role of the G20 has been centered on addressing changes necessary after the GFC, and they also help to form an agreement on how to deal with global recession. So during the GFC, the G20 held meetings to ensure macroeconomic policy, specifically expansionary monetary policy and fiscal policy, were coordinated throughout the world to sort of give a united approach to the issues that were being faced, which did help the world return from GWP growth rate of 0.9% in 2009 to a GWP growth rate of 5.4% in 2010. This being said, it is important to note with both the G7 and the G20 that they are just forums. They cannot enact anything, and being a member nation of the G7 or the G20 does not mean that you actually have to do anything with what's discussed in those forums. Whilst a lot of economies do then go on to implement different things that were discussed at those forums, it is not a requirement of being part of those organisations that you actually have to do anything with what's discussed. Okay, so to finish off our discussion of international organisations, I've just got a few multiple choice questions. So this is from the 2019 HSC, and I'll just give you guys a minute to have a go at this one. And yeah, just if you're watching live, type your answer in the chat. Otherwise, I'll reveal the answer in a minute. Alrighty, so the answer to this one is D. The G20 is best described as a government forum for the coordination of economic policies. And a second practice question, of which institution or forum is Australia not a member? I gave you guys just another minute to think about this one as well. Alrighty, and the answer to this one is A, ASEAN, or the Association of Southeast Asian Nations. But Australia is a member of the G20, the IMF, and the OECD. Next, we'll just have a quick look at trading blocs. So trading blocs occur when a number of countries join together in a formal trading arrangement to the exclusion of other countries. So the difference between a trading bloc and a free trade agreement, which we will talk about in a second, is that trading blocs impose protection on non-member countries. So essentially, trading blocs happen to the exclusion of other countries that are not included. So this includes the EU, which is the European Union, and the North America Free Trade Agreement. Although it says free trade agreement, it is actually a trading bloc because there are requirements for protection against non-member countries as well. So some other terms to be aware of in terms of trading blocs is a customs union, which is a type of trading bloc, which is a trade agreement by which a group of countries charge a common set of tariffs to the rest of the world while guaranteeing free trade amongst themselves. And there's also monetary unions, which is the adoption of countries to a single currency and a unified monetary policy. The big example of this is in the EU, where the euro was introduced in 1992, where specific countries shared a common currency, which is essentially beneficial for trade because it reduces costs, because there's no exchange rate or need to exchange currency involved. And that's pretty much all you really need to know about trading blocs. Just want to get a few examples of trading blocs and be able to talk about them as well. Then I guess the final bit of content before we look at some economics tips is free trade agreements. Probably the part of topic 1 that most people enjoy the most is looking at the free trade agreements. So a free trade agreement is a formal arrangement between 2 or more countries that are designed to break down barriers to trade between those countries. Really important to be able to differentiate between bilateral trade agreement, such as CETA, which is between Australia and New Zealand, and CHAFTA, which is between China and Australia. So this stands for Closer Economic Relations Trade Agreement. Doesn't really give you any hint to who it's between, but it is Australia and New Zealand. And then CHAFTA is China-Australia Free Trade Agreement. Bilateral, pretty self-explanatory, bi meaning 2. So only 2 countries can be involved in a bilateral agreement. But then multilateral, multi meaning multiple, so you've got the EU, NAFTA, which is North America Free Trade Agreement, APEC, and the Trans-Pacific Partnership, which is TPP. And you can also have global trade agreements such as the WTO as well. So really important that you understand the difference between bilateral and multilateral in particular. So looking at some trends in free trade agreements, regional trade agreements have multiplied. There was only 27 in 1990, and by 2007 there was 445, highlighting the emergence of regionalism, not globalization. So essentially regionalism being trade between particular countries within specific regions rather than just trade with anyone in the world who wants to trade. So risk with regional trade agreements is that it does hinder the spread of global free trade as the regions only trade between themselves. And then if you do have things like trading blocks, this trade between regions comes at the exclusion of other economies. So looking at some examples, we've got first the EU. So the European Union is the most important trade bloc in the world economy, can also be considered a multilateral trade agreement. 28 member countries in 2016 and 19 had the euro as their currency. The EU has tended to raise tariff barriers against non-member countries, essentially creating a trading bloc that happens at the exclusion of everybody else. But it provides direct subsidies to agricultural products to support farmers. But with the USA retaliated with similar protectionist policies, which became a problem for Australia and smaller economies. So again, when you're talking about free trade and pros and cons of free trade agreements, something that you can talk about is that free trade agreements can encourage the retaliation effect, which is essentially where certain agreements that come at the exclusion to other people cause those other economies to then create their own protectionist policies, which just goes back and forth until protection keeps getting piled on, which typically affects smaller economies and doesn't tend to affect the big ones like the EU or the US. Then we've got subsidies have caused production surplus, which is then dumped onto foreign markets and creates problems for farmers in developing nations because of those protectionist policies. Again, looking at dumping, which is probably the big reason that you wouldn't want to do free trade because you cannot fix that organically. So problems with multilateral trade agreements, trade blocks, things like that, is that you can't stop countries from leaving them. So essentially, the EU faced the departure of one of its biggest economies via Brexit. So if you want to talk about disadvantages of trading blocks, you can talk about the fact that you cannot stop countries leaving them, essentially. Like, yes, there's a lot of work, but it is still possible. And then you can talk about your example being Brexit. So then we've got APEC, which is another multilateral trade agreement. So APEC stands for Asia Pacific Economic Cooperation, which was formed in the 1990s as a result of various trading blocs. So it does include 21 member countries, including Australia, China, Russia, and the US. And it accounts for 40% of the world's population, 59% of world GDP, and 49% of world trade. And for Australia specifically, it accounts for 75% of our trade. So this forum is a non-discriminatory group as they can trade with other countries outside the group. So this is why it is a multilateral trade agreement as opposed to a trading bloc, because it doesn't come at the exclusion of other countries. So it does actually encourage greater cooperation and openness to globalization. And it's very supportive of the WTO by removing artificial barriers, such as the average tariff levels in the region since 1994 have fallen from 16.9% to 5.6% in 2014. APEC meetings in recent years have also shifted to non-trade issues as well, so it can also become just a general political forum for these countries as well. Now we've got NAFTA, very big multilateral trade agreement, North America Free Trade, established in 1994, made up of your countries in North America, so you've got USA, Canada, Mexico. It's a free trade agreement where agricultural protection is completely eliminated and other tariffs are essentially trying to be phased out over the period between 5 and 15 years. That being said, it's quite good in that there's no protection in agricultural production in these regions. However, there have been American workers who have lost their jobs as manufacturing has shifted to Mexico due to access to cheaper labor, essentially making it more efficient to produce a lot of manufacturing in Mexico instead. However, like what we talked about with the disadvantages of free trade, that is an issue that should organically correct itself with American workers then being allocated to more efficient industries in the future. So next we'll talk about ASEAN, the Association of Southeast Asian Nations, which is essentially an effective force for trade negotiations within the Asia Pacific as it acted as a counterweight to APEC. So then in 2010, they introduced AANZ FTA, which included Australia and New Zealand free trade area with the Asian nations, which committed to eliminating tariffs on 96% of Australian exports. Important to note there that ASEAN does not include Australia. The ANZ FTA is something that is complementary to ASEAN, but does not now include Australia. And it is now, ANZ FTA is now the largest preferential trade agreement that Australia has concluded as well. So then your bilateral trade agreements, free trade agreements between two countries, the big ones in Australia, CETA between Australia and New Zealand, which led to the elimination of trade restrictions between Australia and New Zealand completely. Between Australia and New Zealand, there is no protection. There's not allowed to be any protection between goods and services importing and exporting, and thus there's been an 8% increase in trade. Other big ones for Australia, CAFTA, MAFTA. If you Google Australia bilateral trade agreements, you'll see a whole list of them pop up. I would say it's good to be well versed on at least a few of Australia's bilateral trade agreements in case you need to talk about them in an essay. So as an example of one of Australia's free trade agreements, probably one of Australia's biggest ones is CAFTA. Came about in 2016, which aimed to eliminate 86% of tariffs upon initial implementation and 96% of tariffs between Australia and China by 2029. Focus on agriculture and raw materials, as China is Australia's largest trading partner, and China has access to Australia's services such as education, tourism, and legal. And there's a strong resurgence in recent years of bilateral trade agreements due to the slow progress of the WTO. So when you're doing your research about bilateral trade agreements, you'll actually notice that a lot of them are fairly recent. I say recent in loose terms because, for economics, 10, 20 years is considered recent because of slow progress in the WTO. Something important to consider when you're talking about pros and cons of bilateral trade agreements is that they cannot completely stop a country from going against them. If you guys are well versed on Australia and China's economic relationship, you'll know that in 2020, there was some big problems between Australia and China because Australia chose to participate in an investigation into the origins of COVID-19. China were not very happy with Australia, and they chose to implement some tariffs on big Australian productions such as barley and wine, which has reduced Australia's exports to China and exports in general because a fair majority of Australia's exports go to China, and all of a sudden it became really expensive to export into China, and so those exports had nowhere to go. So if you want to talk about the complexity of bilateral trade agreements, which I do encourage you to do, it'll help your essay be a lot more complex and have a lot more nuances to it. Do some research into Australia and China's trade relationship in 2022 and 2023 as just examples of how a bilateral trade agreement cannot completely stop a country from retaliating, essentially, as well. So that finishes off the content we're going to look at today, but I've just got a few tips on doing well in economics, things that helped me out when I was studying. So some general questions people ask is, how should you approach HSC economics exam for each section? Tips and suggestions. Now, I had quite a different approach to my economics exam than everybody else in my class, at least. And I would say if this works for you, implement it, try and do it. If it doesn't, it doesn't. You don't have to do anything about it. I did my economics exam out of order. So I started with one of the essays. I picked whichever of the two essays I thought was harder, and I started with that. Wrote that essay, then did my multiple choice, then did the second essay, and then did my short answer. The reason for this being is that my hand at the end of an essay was always sore. And I was thinking to myself, how can I sort of, stop my hand from being sore throughout my exam? You've got to be, with economics, you're pretty much writing for 3 hours. There's not a whole lot of time where you can stop and think. So I was thinking, what can I do to sort of minimize that problem? And I was thinking, okay, if I write one of my essays first and then do my multiple choice, with the multiple choice, that's pretty much the only time you get to rest your hand. So I was like, okay, I want my hand to have enough time to rest between my first essay and my second essay, which is why I did it out of order. With that, I would say important to recognize, or with doing it in any order, whichever order you choose to do it, you have to remember that you only have a certain number of time for each section. So for me, I did 45 minutes for each of my essays, and then I did my multiple choice, I think, in about 15 minutes, and then the rest of the time was for short answer. Important that you stick to that time allocation, because there's no point spending an hour on one of your essays and only having 2 hours to do the rest of the paper, because that one essay is only worth 20 marks and you've only left 2 hours to do the other 80 marks. So I think my biggest tip for economics, be super wary of the time. How many statistics do you usually memorize for an essay 20 marker? Is there a certain amount of stats you memorize for the HSC exam? For me, there wasn't really an amount, and I wouldn't give you an amount that you have to memorize. I think you want to memorize as many statistics as you can organically fit into your essay. I think giving students a number of you've got to memorize 10 statistics or whatever, people then try and fit them in where statistics just don't fit, and your essay becomes clogged and it just doesn't sound natural. I would say per key idea, at least 5. But fit them in where they go. If you can do, 10 in one idea and only 3 in the other, that's fine. As long as they fit in organically and you have a good mix of different types of statistics and examples throughout your response. During class, is copying slides or notes or listening to the teacher more important? I would say listening to your teacher is more important. You can always go back and look at those slides or notes. You will never be able to listen to what your teacher says again. What was your most effective way of studying for trials? Any advice on how to revise and how much to revise? With economics, the best way I studied was learning essay plans. So essentially, getting a bunch of past questions from different trial papers and HSC papers, randomly closing my eyes, picking one out, and then just trying to write a trial essay plan for what I would talk about with that essay. So that included, what would my 3 key ideas be, what would the statistics be, where would those statistics go, what would be my main idea that I was sort of trying to argue throughout the essay. And then for short answer questions, just again, same thing, picking out random practice short answer questions. Key word here being random. You don't want to know what they are, and don't bias them towards one topic or another. Picking out random questions and then trying to answer them. Then if you don't know the answer, or say you don't know what other details you'd put in your essay, then I would go back, look at my notes, beef it up a little bit, write down what I didn't remember on a flashcard and learn those flashcards as well. And then my study throughout the year was actually quite similar to that. I think it's super important with economics that you start getting ahead of those essay plans now so they don't pile up. Because if you start doing maybe one essay plan a week, then by the time trials comes around, you're going to have heaps and heaps of essay plans you can look back on, so no question is going to surprise you. Rather, if you try and wait until trials come around to then start thinking about your essay plans, you're going to feel really overwhelmed, because essentially they can ask you a question on pretty much anything that you've learnt, and you have to be able to write an entire essay about it. So get ahead of those essay plans now. Economics essays are quite unique. So for example, this question, for an economy other than Australia, discuss and evaluate the strategies used to promote economic growth and development. Economics essays are quite unique in that you're not particularly arguing anything. You're going to have a main idea that talks about, these strategies were effective or these strategies were ineffective or whatever, but you're not particularly trying to argue it the way you're arguing an English essay. So you definitely want to have key ideas that flow throughout your entire essay, but it's less of an argument, more of a discussion, because it's okay to talk about, this was effective, this wasn't, this wasn't, that kind of thing. Economics essays, you can usually split into 2 or 3 main ideas, and you will, as soon as you read the question, you should be able to pick up what you're splitting your essay into. So it's for example, for me, as soon as I see this essay question, I can immediately pick up my 2 big ideas are going to be economic growth, economic development. I would say super important, just random while we're talking about this particular question. A lot of people neglect their case study. Don't neglect it. It's a super, super easy essay to write if you are familiar with writing it. Don't neglect your case study. Do try and work on it as much as you can. With planning your essays, choose questions and don't waste time. Honestly, as soon as you read those questions, you're going to have a gut feeling and go with it. You're going to know which one you're going to write a better essay on as soon as you see them. I'm a big believer in that trust your gut feeling. As soon as you read those questions, you're going to know which essay you're going to write. You don't have time to waste picking a question. Highlight and annotate the question if that helps you. Pick out the keywords. What do you have to remember to discuss? And what are your directive verbs? Are you trying to discuss it? So do you need to point out pros and cons? Are you evaluating? So you need to make a judgment whether something is effective or not. Are you just being asked to explain? So you need to provide cause and effect. Be really familiar with your directive verbs. And then if you like to plan your essays, like actually physically write them down in your exams, brain dump. Literally write down every single thing you can think about, concept, graph, statistic. Doesn't have to be actually explaining anything, just dot points of things that you want to include in your essay, and you can sort of tick them off as you go. Just some food for thought in terms of economics, things that'll help you achieve that Band 6 level response. Think about short-term and long-term effects with everything you do. Never only talk about short-term, never only talk about long-term. Short and long-term effects for everything you do. And again, for as much as you can, think about effects on individuals, businesses, governments, and the economy as a whole, and then positive and negative effects. Typically, this does have some link to short and long-term, but if you can discuss short and long-term, individuals, business, governments, and positive and negative, you're going to have a really complex and sophisticated discussion of effects of a particular policy or whatever you're talking about. Do try and include diagrams and graphs in your essays. I would say aim for at least one graph or diagram per essay. And you can also use formulas throughout your responses, so such as the aggregate demand formula, consumption plus investment plus government spending, plus the difference between exports and imports when you're answering a macroeconomic question. With questions that you need to talk about policy, or just talking about policy response in general, make sure you have key statistics, specific examples of those policies. And for your stimulus essay, consider how you can refer to it multiple times throughout your response. I would say a lot of people get overwhelmed with the stimulus essay because they think they have to reference it every 5 seconds. You don't. You just have to reference it a few times throughout your essay. It's just there to be used as like another example that you can include to strengthen your discussion, okay? You don't have to talk about it every 5 seconds. It's not like an English stimulus where like your whole argument has to be surrounded by this stimulus and like built on this stimulus. In economics, those stimuluses are just meant to be pieces of information that you can include throughout the response. I would say do include it a few times, different bits and pieces of the stimuluses. They are usually quite long, so there's a lot to unpack there. And then always thinking about what do the key terms require of you. General tips. Make sure you read all the questions in the reading time. Start backwards. Big. I cannot stress it enough, start backwards. Read the essay questions first, pick your essays, then your short answers, then your multiple choice. I am a big believer that you should not do your multiple choice in the reading time. I think you overthink things too much if you spend too much time thinking about them. So if anything, in your reading time, think about your essays rather than your multiple choice. But yeah, do make sure you pick which essays you're going to do. Like I said before, never spend too much time on one section. It's not worth it. You've got to remember that your sections usually, other than short answer, are all worth 20 marks. So multiple choice is worth just as much as one of your essays is, okay? So super important to remember not to spend too much time on one section and to be very, very wary of how much time has passed in your exam. So watch the clock. Something to include, watch your handwriting. Now, a lot of people think that your handwriting doesn't matter. And for the most part, it doesn't. But if they can't read your handwriting, they can't mark it. So make sure your handwriting is always legible. If you read back on something and you don't even understand what it says, rewrite it. Because they can't mark what they can't see. Always make sure you're including your stats, current economic conditions, know your syllabus, do your essay plans throughout the year. And if it helps you, plan your essays in the first 5 minutes of the exam, unless you're like me and you just do the essay in the first part of the exam. But yeah, otherwise I would say write down what you're thinking about the essays before you begin. And finally, just some other general frequently asked questions I get about economics, just year 12 in general. How do you prioritize studying for subjects? For me, study for subjects based on units. So all your 2 units should have the exact same amount of time allocated to them, and your 1 unit should have half of that time allocated to them. What is the best way to remember the syllabus since it's such heavy content so that during exams we're confident what we get tested on? I think the best way to become familiar with your syllabus is actually just to do past questions. Every single past question you look at is going to be based on a syllabus point. The more you do past questions, the more familiar you become with the different things from the syllabus you can get asked about. What are the best, most useful websites and resources for collecting recent and up-to-date economic data? For Australian economic data, anything that ends in .gov, all your government websites are going to be your best bet to getting accurate data. Honestly, I would find with economics generally, like Googling specifically what you want, usually something will pop up, and then you just have to use your judgment to think about, is this going to be an accurate website or not? Also using like the official websites of things like the UN, the WTO are going to give you accurate information as well. And any tips on staying engaged or making the content more enjoyable, as some of the content is quite heavy and can be confusing. For me, with economics, relate it to real life. Think about things that you went through. So with COVID, thinking about, what you remember from your own COVID experience, making it relatable to your real life. Thinking about actual current examples of things as well, for me, just helped to make it a little bit more enjoyable. And also just helped me to remember it because it was relevant to something that I was doing as well. So that brings us to the end of today's lecture. So thank you guys all for joining me today. I hope you guys learned something. If you are watching the lecture live and you've got any final questions about anything we looked at today, or just other economics questions in general, or Year 12 questions, live questions, anything like that, feel free to ask them in the chat. I'll be here to answer your questions. But otherwise, thank you guys for joining me today. I hope you learned something. See you guys.